Well, hi there everybody, this is Morris and I'm going to give a demonstration on how you can use the Option Colors platform to analyze short-term trades and how to analyze if you should exit them or to take those profits or losses when they've occurred. So what I've done is I've built some sample trades that people are doing really short term. Here's a condor, broken wing butterfly, credit spread, naked put, a long call, another long call, and then a in the money credit spread. So there's different options for you, and you'll see how you can actually analyze any kind of trade that you want and bring in statistics, and to use these statistics as a guide on how much to invest, when to exit, when to enter, etc. So next, let's look at the price chart. So here we are looking at a 30-day price chart of SPX. In this example, I'm just going to use the last 30 days because I want to use recent price action and bring in these statistics into my trade. Now the software can bring in any statistics that you want, if you want 1 year, 2 year, 5 year, 10 year, but for this example I'm going to use just the recent price action of the market. So here we are, we're going to do a quick analysis on the iron condor using the last month of price changes. So I come over to my time in selector and I just move it over 1 day. And I'm set to 100%. This means that I'm including all of the trades that could have possibly been done for 1 day during this last month. And in total, I have 16 different trades, which I can see down here. And I can also see the percentage. Notice where it says 19%, 81%. That tells me how many times the price has moved to the left and to the right over the last month. When I move the mouse here, then I can see that it's never moved, at least the last month, beyond this point, beyond the break-even point, and on the right side, it has almost 20% of the time. And then your average return, when you include all of those price moves, comes out to a loss of about 5%. If you're looking at a 1 standard deviation overnight, you're looking at a return of 11%. So that's up to you. You have the statistics. You can use 100%. You could look at both. Let's look at the next trade. So here we are again with the broken wing butterfly. And again, I can see that this one to the left of the break even's almost been 50-50. Again, if you look at your statistics down here, then you'll see my break even's right here, and about 50% of the time you're losing over there. And then from this break even, about 19% of the time you're losing on this side. And then if you look at a 1 standard deviation move, you're looking at a profit on this trade, about 5% on average. Let's look at the next one. Here we have a credit spread, and this one's averaging 14% with the 1 standard deviation move. And then 100% if you include all the trades, then it's still profitable 14%. And then basically it looks like it lost just 6% of the time over here. Then you have your in the money call. So this one, again, we start to lose. Here's our break even point. So 19% of the time we finished over here with a losing trade. But when you add up all the statistics, it was still making 1,600 on average. And then we have the out of the money call. And this one also had a big win on average because you're paying hardly anything for the option, but 1 standard deviation move and you're losing. So this one needs that larger move to see a profit, at least 2 standard deviations. Then you have your in the money credit spread here, and then on average it's profiting 1,400 or 21%. And then including all the trades, 33% on average. So this is a way that you can go through your favorite trading styles and do a quick analysis on how they've been performing over the last month, compare them, decide what you want to do. Of course, determine your trade sizes accordingly, because the losses could be huge if you're over leveraged. So make sure that you do the math. So next, what we're going to do is we're going to see how these trades did perform overnight. So I'm going to fast forward one day. So here's the condor. We finished over here, and this one stayed where we needed it to stay, and it profited the $1,000. The butterfly actually lucked out and profited 6,000, over 6,000. This vertical credit spread profited. Naked put profited. The in the money call made its profit. The out of the money call lost, again, because this one needs that larger move. And then your in the money credit spread also profited 2,800 or 42%. Now the next thing I want to look at is, let's say you're in the trade and it's during the market and you want to determine if you should exit the trade or stay in longer. So what you could do at that point is take your current position and put a little more time into it and be set at 100% and see if the profit goes up or down. So in this case, when I move it past the weekend, that's why it's on 3 to Monday, then we're looking at an average return of 6,700, where currently the trade's at 2,800. So you can see an example here of a trade that could benefit, not always, but could benefit by staying in the trade longer. Let's go back to the condor, and we'll put in the weekend. And this one you can see from where it is right here, if you were to stay in this trade over the weekend, probability is you could finish over here because it's only a 0.3% move, and you could start to lose, and your average, if you stay in a trade, is going to be a loss of almost $5,000. So this type of trade, if you're up 1,000, then you definitely would want to exit, because statistically it's going to lose. When you look at the butterfly, again, you're up 6,000, but if you put the weekend into it, your average return would be a loss of $15,000. So again, having these statistics right at your fingertips here in option colors can help you determine if you want to stay in the trade or if you want to exit and take those profits. Next, we have the credit spread. If you stay in for the weekend, you're looking at 598. And it makes no difference. It's currently up at 598. This in the money call, this one's currently up over 2,000. If you were to stay in over the weekend, your chances improve to $7,000. So that could be an example of a trade where you might want to stay in one more day if you're doing like a 2-day trade, or if you're doing intraday trading, maybe stay in a few more hours. And then here you have that out of the money call, where currently it's almost break even. But if you were to stay in over the weekend on average, again, using the last month of statistics, you're looking at a pretty nice return. And then the last one, you're in the money credit spread. This one shows over the weekend 6,700, and currently it's 28. So again, another type of trade that could be beneficial to stand longer. So that concludes today's demonstration. I hope that you've seen how option colors could help you both design trades that are short term, but also determine if you should stay in those trades or exit those trades with your profits or your losses. Thank you very much for attending this demo, and look forward to providing option color software to you in your future of trading. Thank you very much.